In almost all countries, tax revenue is a major source of financing of publicly provided services. In a democracy, a majority of citizens, or their representatives, vote to impose taxes on themselves in order to finance, through the public sector, services on which they place a value but they believe cannot be adequately provided by the market process. In this course, we will focus our attention on three major categories of taxation: sales and excise tax, property tax, and individual and corporate income tax. Taxation is the imposition of a mandatory levy or charge by the government unit to provide financing for public services. A tax based on the retail selling or rental price of tangible personal property is called a sales tax. Sales tax may be assessed on many products or services. Most states and many other taxing units, such as cities, counties, and municipalities, levy or charge a tax on sales. Businesses that purchase merchandise for resale to others are normally exempt from this tax. Only final buyers pay sales tax. Many states allow a sales tax exemption for food, prescription drugs, household medicines, and other selected items. The liability for a sales tax is incurred at the time the sale is made. Retail merchants act as agents, collecting sales taxes and periodically remitting them to the proper taxing agency. The sales tax rate is expressed as a percent and varies from state to state. Many state and local governments provide retailers with sales tax tables. These tables are used by businesses that do not have electronic cash register systems that automatically compute the proper amount of sales tax. When sales tax tables are not available, the percent method may be used to calculate the sales tax on an item or a service. Other non-taxable charges, such as packing, delivery, handling, and setup, are added after sales tax has been computed. So let's take a look at the steps to calculate sales tax and total purchase price by using the percent method. Step number 1, calculate the sales tax by multiplying the selling price of the good or service by the sales tax rate, where sales tax equals selling price times sales tax rate. Then, step 2, compute the total purchase price by adding the selling price, the sales tax, and any other additional charges, where total purchase price equals selling price plus sales tax plus other charges. Another type of tax levied by federal, state, and local governments on certain products and services is known as an excise tax. An excise tax, which is paid in addition to sales tax, is imposed on so-called luxury or non-essential items. Some typical examples are tires, alcoholic beverages, jewelry, except for watches, gasoline, furs, firearms, certain recreational equipment and sporting goods, tobacco products, telecommunication, including telephone services, and airline and cruise ship transportation. As with the sales tax, an excise tax is usually expressed as a percentage of the purchase price. In certain cases, however, the excise tax may be expressed as a fixed amount per unit purchased, such as $3 per passenger on a cruise ship or 15 cents per gallon of gasoline. When both sales and excise tax are imposed on merchandise at the retail level, the excise taxes are not included in the selling price when the sales tax is computed. Each tax should be calculated independently on the actual selling price. Here are the steps to calculate the amount of an excise tax. Step 1. Determine and apply the appropriate method. When expressed as a percent, multiply the selling price of the item by the excise tax rate, where excise tax equals selling price times excise tax rate. When expressed as a fixed amount per unit, multiply the number of units by the excise tax per unit, where excise tax equals the number of units times the excise tax per unit rate. Step 2. Calculate the total purchase price by adding the selling price plus the sales tax plus the excise tax, where total purchase price equals selling price plus sales tax plus excise tax. Here's an example of calculating excise tax. The round-trip airfare from Miami to New York is $379. If the federal excise tax on airline travel is 10% and the Florida state sales tax is 6%, what is the amount of each tax and the total purchase price of the ticket? To determine sales tax, we take the selling price times the sales tax rate, where sales tax equals $379 times 0.06 to equal $22.74 in sales tax. Then the excise tax is calculated by the selling price multiplied by the excise tax rate. In this case, excise tax is 379 times 0.10, which is equal to $37.90. Then we find our total purchase price by taking the selling price, adding sales tax, and adding excise tax, where total purchase price is $379, the original cost of the ticket, plus $22.74, the sales tax, plus $37.90, the excise tax. Our total purchase price, then, is $439.64. Most states have laws that provide for the annual assessment and collection of property taxes on real and personal property. Property taxes are assessed and collected at the county level as the primary source of revenue for counties, municipalities, school districts, and special taxing districts. The value of property for tax purposes is known as the assessed value. In some states, assessed value of the property is a specified percentage of the fair market value, while in other states it's fixed by law at 100%. The typical factors considered in determining fair market value of a piece of property are location, size, cost, replacement value, condition, and income derived from its use. The assessed value is determined each year by the tax assessor or property appraiser. Most states allow specific discounts for early payment of the tax and have serious penalties for delinquency. The Department of Revenue in each state has the responsibility of ensuring that all properties are assessed and taxes are collected in accordance with the law. On the basis of fair market value, less all applicable exemptions, the property tax due is computed by applying the tax rates established by the taxing authorities in the area to the assessed value of the property. Property tax equals the assessed value of the property times the tax rate. Let's take a look at the steps to calculate property tax when property tax is expressed as a percent. Step 1. Convert the tax rate percent to a decimal by moving the decimal point 2 places to the left. Then, step 2, multiply the assessed value by the tax rate as a decimal, where property tax equals the assessed value times the tax rate. Here's an example of calculating property tax using a percent. Calculate the tax due on a house worth an assessed value of $250,000. The tax rate is 7.88% of the assessed value. We find the property tax by taking the assessed value and multiplying it by the tax rate, where property tax equals $250,000 times 0.0788 or $19,700. Income tax is a pay-as-you-go tax based on the amount of income an individual or corporation makes. For individuals subject to personal income tax, a tax return must be filed on the appropriate IRS form before midnight on April 15th. The tax return pertains to income earned during the previous calendar year. As the income tax filing deadline approaches, taxpayers must begin preparation of their tax returns. Although tax preparation services are available to help with this annual task, you still have to keep and organize records necessary for the return. Taxable income is the amount of income to which tax rates are applied in order to calculate the amount of tax owed for the year. Here are the simple steps to calculate taxable income for individuals. Step 1. Determine the total income by adding all sources of taxable income. Then, step 2. Calculate adjusted gross income by subtracting the sum of all adjustments to income from total income. Step 3. Subtract the sum of the itemized deductions or the standard deduction, whichever is larger, from the adjusted gross income in step 2. Then step 4, finally, multiply $3,950 by the total number of exemptions claimed and subtract from the outcome in step 3. The result is your taxable income. If taxable income is less than $100,000, the tax table must be used to figure the tax liability. When the taxable income is $100,000 or more, the tax computation worksheet for appropriate filing statuses must be used. The most recent version of these forms may be found in the instructions for Form 1040 published by the IRS. Let's take a look at the steps to calculate an individual's tax refund or tax amount owed. Step 1. Subtract total credits from the tax liability. Step 2. Add the total of all other taxes to the tax liability to get the total tax. And finally, step 3. If total payments are greater than the total tax, a refund of the difference is due. If total payments are less than total tax, the difference is tax owed.